and welcome to the ET Money Show, your one-stop destination for all your personal finance queries. I'm Shrishti Sharma, and today we have lined up a power-packed show for you as this is the last trading day of 2022. So let's move on and tell you what you should expect in the next 60 minutes. So first up, 2022 comes to an end. We'll discuss the 5 things that you as an investor should start in 2023. We'll bring on board Mrin Agrawal, founder director of FinSafe. Mrin will also answer your queries related to your mutual fund portfolio. So do send us your queries on our WhatsApp number, that is 8657974571, or you can also email to us. And next up, we will give you a complete guide on how to get and fitter and healthier in 2023, and we'll be joined by Prashant Sawant, who is the founder of Body Sculpture. And in the last leg of the show, we will celebrate the spirit of investing and trading with 2 very special guests. That's a special programming that we have got for you all, so stay tuned for the special conversation. Well, let's move on and let's talk about our first discussion. New Year calls for new beginnings and resolutions as well. And what can be better than making a fresh start in personal finance? As we head into the final hours of 2022, let me bring on board Mrin Agrawal, founder director of FinSafe, to discuss the 5 things that you should start in 2023. Mrin, welcome. Thank you so much for joining us today on ET Money Show, and welcome to the show. Firstly, let's talk about what are the things that people should keep in mind for 2023 when it comes to investing? How should they start their investing journey? What's your take on that?
So good evening, Shrishti. Lovely to be here today on this last show pretty much of 2022. And, when I look at investor behavior through the years and through 2022, I felt that there are certainly a few things that investors need to focus on more in 2023. And to start off, I think I would say work with a financial planner, because one of the things that I do see is that people continue to invest in a very ad hoc manner, tend to choose investments that have near-term good performance. Or I also see that people tend to take advice from other financial experts who are not necessarily financial planners. So it's a very common thing to take advice from chartered accountants and to take advice from insurance agents. And, while they are experts in their own field and, can certainly give you opinions about products, I think what one needs when one wants to have a good financial life is to have a proper financial plan created, which can only be done by certified financial planners. So, while a lot of people may not like me saying this, but the reality is that today, a certified financial planner who's certified and who knows how to create a financial plan is what you need. And, just taking advice from different people on various products or taking opinions doesn't work all the time. Of course, they could help you to an extent, but that doesn't work all the time. So I would say that the first thing would be is to find a fee-only financial planner through whom you could get some advice. And of course, given all the talks that we are seeing around recession and the fact that, inflation continues to be high, I think one of the things that investors need to start focusing on is also how do you actually beat inflation in your portfolio. So when you look at most investment portfolies, they have very, very little exposure to instruments that can actually beat inflation. And most of them are typically invested, like a large majority of portfolio is typically invested in traditional investments like fixed deposits, insurance policies, which do not necessarily beat inflation. And the problem with that is that your portfolio is not growing. So what is really important is for investors to look at their overall portfolio to see at an overall level, are they beating inflation? At an instrument level, are they beating inflation are required in order to do so, because otherwise you're not really growing your money. So these are the first two things that I would, of course, suggest investors to start off with.
That's the wise advice coming in for 2023 on personal finance goals. So get a financial planner and focus on how you can beat the inflation with the investments that you are planning to make. But Rin, a lot of times it gets very necessary how you make and keep the records of all the financial decisions that you are taking. So what is your advice? Because a lot of people come to us and they find it difficult to have a repository for that. So what is your view on this?
Yeah, I think that's another very important aspect. Recently there was a acquaintance of mine who had a tax inquiry, and the only reason that that person was able to handle it was because their papers were like really well filed, is what I would say. And a lot of times what happens is that people don't have their documents filed properly, or they don't have documents in order, and that leads to a lot of problems in case of contingencies. So of course, in case of death, for example, it's very commonly seen that most family members are not really aware of where the financial documents are, or what are the financial holdings that the individual had. So it's very important to actually get all of your documents together. And the good thing today is that you have so many ways of doing it and maintaining most of the things electronically. So that's another very good thing. It's not like you really have to maintain all of your mutual fund statements in physical form. I mean, everything is electronic. You can have e-insurance repository for your insurance policies. So by and large, most investments, sovereign gold bond scheme, NPS, everything is electronic in nature. All it requires is for you to actually create an Excel spreadsheet and just mention all the details with the relevant information, like mode of holding, nominee, name of the person whom you're dealing with, and stuff like that, and share it with your family members.
Okay, but when a lot of people find markets very easy, they want to get in, they want to make some money out there. So, in 2022, we had many experiences, especially on the retail side, where they were made some promises on some lucrative deals, but those were not really great ones. But coming up for 2023, what is your advice coming in? How to stay away from all these financial dopamines?
Yes. So, first of all, stop chasing trends on near-term performance. I mean, if you look at it, the top performing assets, the top performing asset classes, let's say. So, for example, mid caps and small caps were right at the top in 2021. They're right at the bottom. Gold, which was somewhere at the bottom in 2021, turned out to be the best performer in 2022, right? So, makes no sense to chase trends at all. Free advice. I mean, there is so much of free advice today, but it's on YouTube, on social media, people all around. There is so much of free advice that's available everywhere. You just need to junk that and look at advice, as I said, from certified sources. Many times, we also get swayed by success stories of big investors. Like, so I keep hearing like, okay, I invested in this IPO and I made so much of money so quickly. Or, a particular investor bought a particular stock and they kind of multiplied their money in a big way in that. Or you hear a lot of stories around F&O, and you hear a lot of stories around trading. And I think what you need to remember is that their risk profile, their ability to take losses, is completely different. And the other thing is, everybody's telling you when to buy. How many people are telling you when to sell? So I feel that all of these stories are great to hear, but remember that those are the lucky people for whom it played out to. It may not, and most likely will not play out to you. Of course, again, anything that makes money too quick doesn't really last. So 2021 was all about these big IPOs that came in, and all of them are down in 2022. So remember, it's not easy to make money. You need to have patience. You need to give it some good long period before which you can actually make good money. So all of these investments which, talk about multiplying your money quickly, or where you can get some fantastic returns in short term, uh, remember to stay away from them. That story doesn't really last. And finally, the easier it is to take risk, the easier you the faster you take that risk. So the easier it is to take risk, the faster that you take that risk. I think that would apply in the case of loans, especially like the buy now, pay later loans, which are so easily available today for every little thing that you want to buy. So remember, it's easy to take the loan. It's that much more difficult to keep repaying multiple loans. So try to stay away from loans as much as you can. I think I've covered most of the financial dopamines.
But any other advice, Mrin, that you wish to give our viewers for coming 2023 on the financial front? What are some of any other point and aspect that they need to be looking at?
So yes, as a parent of a teenager, I would like to say that I think it's really important to talk to children about money, because I do see a lot of parents working really hard to fund the higher education costs, which are going through the roof, especially with a lot of kids also wanting to now study abroad. And I think it's really important to make children aware about money matters, talk to them about it. It's also nice to kind of talk to them so that they become more aware and maybe also better prepared for the future, and also so that they can actually value what you're doing for them in terms of paying the higher education costs. They can probably value it more. So, of course, a lot of this cannot really be spoken. You have to do it through your actions itself. But remember that children always emulate parents' spending and saving habits. So, of course, you need to be a role model for them as far as financial responsibility is concerned. But at the same time, I think as far as teenage and children are concerned, I think it's also important to talk to them about the education expenses, to make them aware of money matters, so that once they're off to college, they can manage their life a little better.
Okay, so that's the advice or some of the points that you can look forward to for coming 2023 on the financial front and also on the personal finance front. Thank you so much, Rin, for this interesting highlights and things to look at for 2023. Well, let's move on and let's start take queries from our viewers, because there are a plethora of funds that are available in the markets where they invest their money, but it's very important to assess whether or not you have invested in the right fund or not. So we have got a lot of email queries with us today, Mrin. So let's start taking them one by one. The first query that we have is from Anand, and he says that he is 23 years old and have just started investing in equity mutual funds. So currently he is investing 2,000 per month in HDFC Midcap Opportunities Fund and intend to diversify his portfolio and add an index fund as well, or maybe a flexi cap or a large cap fund. So he wants an advice on which fund he should add.
Well, firstly, congratulations on starting your journey pretty early in life and taking risk as well, because you started off with the mid-cap fund. I think if you want to diversify, of course, I would suggest either you take the index fund, but somewhere I would prefer a flexi cap fund, because the flexi cap fund also has exposure to, of course, large caps. There are certain flexi caps that have exposure to international stocks as well. So I would actually prefer a flexi cap fund so that he could also get a diversified exposure as well.
Okay, but let's move forward to the next query that we have, that's coming from Romita, and she says that she's investing in mutual funds for the last 5 years and have already accumulated a corpus of 3 lakhs in the last 4 years or so. Wants to accumulate a corpus of at least 30 lakhs for studying in the UK 5 years later from now. So wants a suggestion which some of the funds that where she can actually invest 10 to 20,000 per month, and how much should she ideally invest per month to achieve the target.
So since she has a period of 5 years, what I would suggest is that she could look at the dynamic asset allocation category, which is also known as the balanced advantage funds. it will be a bit of a risky proposition. So I want to say that upfront. I mean, if you're looking at a much safer avenue, of course, you could look at the debt funds, but then you may not be able to actually reach your, the amount that you want. So I would say look at the balanced advantage funds that exist, because with the balanced advantage funds, there is this automatic rebalancing. So to that extent, there is some bit of downside protection in that sense, or a lesser downfall is the way I would put it. So yeah, you could look at balanced advantage fund, or if you want to be really conservative, then look at the short duration debt funds.
Okay, but Rin, you did highlight the category of the fund that she should be looking out for. Any specific name that that's there where you wish to guide our viewers on?
She could look at the ICICI Balanced Advantage Fund, and on the short duration fund as well, she could look at ICICI, she could look at HDFC as well on the short duration funds.
Okay, so ICICI and HDFC are the two names for you. But let's move on. And the third query that we have is from R. Raghavan, and he's investing 10,000 per month in mutual fund and holding the following funds as well. So let me quickly just say their names. In every mutual fund, he's investing 2,000 rupees. ICICI Prudential Equity and Debt Fund, Quant Small Cap Fund. The third one he has is Nippon India Small Cap, and the fourth one in his list is ICICI Prudential Technologies. So going forward, he wants to accumulate 1 crore rupees in the next 15 years. So what's the advice coming in, Rin? Are these funds good enough to accumulate this amount, or any other fund that he wish to have in his portfolio, and will this amount be good enough to achieve his target?
So I'm okay with the small cap funds that he's got in the portfolio, because, given that he's got a 15-year time frame, just one thing, what I would recommend is that please remain invested through the volatile periods. Now, as far as the sector fund is concerned, I generally don't like sector funds. And the reason being that they're very concentrated, they're much higher risk. And of course, I mean, technology as a sector has some good long-term prospects, but even then, from an investment strategy, I would really not recommend a technology fund. And in any case, when you choose a diversified fund, the best of the technology stocks in any case would be there in these funds as well. So I would actually rather go with a mid cap fund, and maybe the index, because the index also has a good amount of technology allocation in any case. So I would actually look at doing an index fund, maybe a Nifty index fund, and look at doing a mid cap fund.
Okay, the last query that we have, Rin, is from Jignesh, and he's investing 11,000 per month. The names that he has shared is Canara Robeco Blue Chip Fund, Canara Robeco Small Cap Fund, Quant Tax Plan, and Mirai Asset Tax Saver Fund. He has a high risk appetite, and he's looking to build a good corpus of money before he turns 50. Currently, he's 25 years old. So want some suggestions on these funds, whether or not you find them good, and moving on, some other funds that he can add on to his portfolio basket as well.
I think these funds are fine. They're good to stay with, basically. And of course, I think going forward again, my suggestion would be to add some mid cap funds. For example, you could look at DSP mid cap. You could look at Kotak Emerging as well. Both of these are good funds. So I would say that, since you have a 25-year time frame, look at adding on some mid cap funds. You could also look at the Nifty the mid cap 150 index as well. If you're a little, don't want to go for active funds, you could just look at the index fund as well.
Simran, any suggestion on any mid cap fund that he can add on? Any specific name?
Yeah, I mentioned Kotak and DSP.
Okay, so that's the advice for Jignesh. But with this, we'll let you go on that, Simran. Thank you so much for joining us today on ET Now, for helping our viewers know which are some of the key things that they should be looking out for 2023, and also resolving their portfolio queries. With this, thank you so much, and a very happy new year to you.
Thank you.
Okay, but with this, it's time to slip into a short break, but don't go anywhere. We'll be right back with more.